This week has been action-packed with plenty of volatility, and now the Fear and Greed Index is in extreme fear territory. Is this a buying opportunity? If we listen to what JPMorgan has to say, the classic signs of a stock market bottom aren't here yet. Here's what to watch for. Now, if we come over and we look at the volatility index, yesterday we saw the VIX coming all the way up to 65.73. Today it's coming a little bit lower, but one characteristic of the stock market's action, when the VIX is elevated, especially anything over 25, then a lot of times we're going to see these knee-jerk reactions where the market goes up, bam, comes back down, goes down, whoop, goes rallying on the way back up. And for a day trader, volatility is one of the key components we need. If the market doesn't move, we can't make any money. This morning, we look at the dollar index. We see right now, the dollar index is up 45 cents on the session. We take a look at 10-year yield. 10-year yield also on the move up higher. We come over and take a look at gold this morning. Gold is basically having a doji-ish looking candle up 8 points on the session. And we got to ask ourselves, all right, was this nothing more than a simple correction in the stock market? The Russell 2000, if you look at how much it lost from the high down here to the low, it was down roughly 13%. Is this nothing more than a correction? And we're getting ready to rally back up. Keep in mind, with a lot of stocks and indices out here, we have a lot of gaps that still need to come back and get filled. Let's not forget, we're still in the midst of earnings season, and after the bell, we have super microcomputers coming out, Rivian, Airbnb, Reddit, just to name a few. If we come over real quick and we take a look at a chart of SMCI, SMCI's had this consolidation. We broke below it. Are we now going to come back and revisit this consolidation, or are we going to see SMCI come all the way back down here to the lower level consolidation? Look at the MACD indicator on the daily chart. Looks extremely horrible at this moment, but it doesn't mean things won't start to firm up. And remember, with any type of news item or earnings per se, it can destroy any chart pattern we may be looking at. We come over and take a look at Rivian. Rivian yesterday opened way lower and rallied up throughout the session. And look, Rivian right now up in pre-market, up 4% on the session. We basically came right into gap support. We overthrew it by a little bit, boom, bounced on the way back up. But I want to warn you, the MACD indicator still looks extremely horrible at this moment. We come over, we take a look at the diamonds. The diamonds in pre-market are up 0.62%. And yesterday, I warned you guys about this candle. In the context of a downtrend, you see this big selling tail on the top of the candle. We do have a little bit of buying on the bottom of it, but look how much selling was in that candle. Now, in the context of a downtrend, that could be part of a reversal pattern, and it is the weakest of all reversal patterns. But that does not mean it won't be enough to lift the market up, potentially coming up and fill in some of these gaps. We come over this morning, we look at the QQQs. What do we see? Yesterday, opened way near the lows, boom, bounced back up. And now in pre-market, we see the Qs are up $4.80. Now, last night on the stream, we were talking about the Nikkei as we were trading the NASDAQ. Nikkei up 3,217 points. HSI, though, was down 51 points on the session. If we come over, we look at the DAX real quick. The DAX right now is down 23 points on the session. So we got to ask ourselves, will the Qs be able to come back over here, potentially fill in the gap? Notice we've run right back into the high volume area on the composite profile. The MACD indicator on the daily chart looks horrible at this moment. On the 4-hour chart, MACD indicator was pushing the new lows, but it doesn't mean we can't start to firm up. Right now on the 4-hour chart, we don't see that. Yesterday, the last 4-hour candle was an inside candle, which suggests that today will be a breakout or breakdown from that candle. And you can see right now in pre-market, we're actually above yesterday's candle high. Now, let me know in the comment section down below, do you think this breakout to the upside is going to hold, or do you think it's going to be a false break and we're going to come back down towards the lows? We look out here on the hourly chart. What do we see? MACD indicator trying to base out down here near the lows. But let's not forget, we have several gaps to the upside, which still need to come back and get filled. Then as we look out here on the 30-minute chart, and I drew this out for you guys in the 5 o'clock video last night, we have the potential for an ABC pattern on the way up. That brings us to a price point of about 451.76. Now notice we also have that gap right over here. Now, in order for this pattern to be validated, we must break above the swing high of about 442.12. If we can break above it, then that would validate the pattern to the upside. One thing I do want to caution you guys on, though, is the fact that if we start trading below yesterday's afternoon's low, then we have to recalculate this ABC pattern and just simply drag our Fibonacci extension tool down here just a bit. Now, when we look at the volume profile levels, we have value area high coming in at 438.13. We have the point of control coming in at 434.15. value area low coming at 432.81. Now notice in pre-market, we're already above value area high. So you guys know the MO. Then notice if we come back down below value area high, then I'm gonna be looking for a rotation lower, but we wanna watch out for this minus development area. Maybe we break back down below value area high, we come into the minus development area, then we get a rejection and we start heading back up. However, from a volume profile standpoint, once we break value area high, then I'm looking for the point of control to get tested. We break that, looking for value area low. But however, if we break value area high to the downside, then we start coming back up. Notice we'd have to be on the buy side of the trade once we are back above value area high. It's a very easy syntax, if then syntax. If we're above value area high, I'm only looking for higher prices. We get back below it, I'm going to be looking for sell side trades until we break below value area low. And if we start coming back up, then I need to switch back on the long side. Or if we break below value area high and we start coming back up, I then would also need to be on the buy side of the markets. I want to make everybody aware, Apex 7 a massive 80% sale off all their valuation accounts, passed in as little as 1 day. And you can also get a $150K account for only $40. You get a $250K account for only $40. And you get a $300K account for only $40. So if you want to take advantage of this offer, use the link in the description box down below and use the promo code Mike at checkout. And we look at the futures markets this morning. Notice we came right into the gap that we had from Sunday night. However, we did not make it up far enough to fill the gap at this moment. Now, right above us, we do still have that high volume area, and that is going to be a point of attraction. One, it's a high volume area on the composite profile. Two, it's right near the gap fill from Sunday night. And you can see off of the lows, we have come up substantially from the low of yesterday, even to the current price. And we're not even at the high. That's 776 points off of the lows. As we look at the daily profiles, notice we have a untested point of control above us. We have one all the way down here near the lows. That one down here near the lows have been out there for quite some time. We do have a double bottom pattern as well. And if we go ahead and map out, where would that double bottom pattern take us? That gives us a price completion about 18,621. Then we also have this ABC pattern right here, which gives us a price completion about 18,815. So we do have plenty of targets to the upside. However, is this going to be a busted pattern? And we see the market just simply rolling over. Right now, you can see that we've been above yesterday's value area high. And right now we're just below that area. Now, as long as we're below value area high, then I would be looking for the point of control to get tested. Well, that's exactly what has transpired. The next target location is really all the way down here towards value area low. However, if we use the overnight volume profile levels, they can provide additional entries and targets into this market. Then as we come over and look at the SPY, notice the selling tail on top of the candle yesterday. However, this could potentially be bullish. This could be part of a reversal pattern because this candle shows up in the context of a down move in the market. If this candle would have showed up, let's say up in this area, it would actually be a bearish candle, but the location of the candle is very key. Now, I'm not saying we're going to be, all the way back up to all-time highs out here today. I'm saying this is more of a warning sign reversal pattern. This is not the strongest of all reversal patterns. We look at the MACD indicator, still looks extremely weak at this moment. And I do want to caution you guys on something, because if we look at the Qs and the SPY on the weekly chart, the MACD indicator has just started to cross from the weekly time frame, which also suggests that we could see substantial selling from these price points. We look out here on the 4-hour chart, MACD indicator still looks extremely horrible. We look out here on the 1-hour chart, MACD looks like it may be trying to firm up here just a bit, and we could have that ABC pattern to the upside. A to B, B to C, and that gives us a price completion at about 528.02. That is not enough to fill the gap over here. Now, if we overshoot it and go to the 127 extension, that would give us very close to filling the gap. But I want to see the MACD indicator actually start to firm up. Then as we come over and look at the 30-minute chart, we actually see the MACD indicator starting to firm up. But the question I'm asking myself is, we know people that were getting long yesterday probably have their stops underneath the low. So wouldn't it be a very deviant thing for the stock market, flush right below the lows, wash out everybody's stops, and then go ahead and try to make a move up higher? That is something I do want to keep in my playlist. And if we look at value area high, that comes in at 519.76. The point of control will be 516.41. Value area low will be 515.08. Notice we are right now currently trading above value area high. So as long as we're above it, I want to look for higher prices. But you want to remember, today, if we open where we currently are, we're going to have a gap today as well, which does not necessarily mean the gap will get filled. However, with the volatility at the higher levels in which we're at, does lend to the case we'll see a lot more back and forth in the market than just a one directional move. So we do want to be mindful. So if we break value area high, I do want to look to see, can we come down and potentially go ahead and fill the gap. Then as we come over, look at the futures markets, notice nice push up off the low. If you look on the futures markets from the low all the way up to the current price, that is a 134-point move. Now that is a massive move, and we're up actually higher than that at one point yesterday. We look out here on the profile. What do we see? Two of the areas that have my attention. One, the minus development area right over here. And then we have this structure breakdown point. I'm going to go ahead and draw it out. That's going to be from the candle wicks all the way up here to the candle body. Notice when we broke down through it, we did get a test right here, but I still think the market's going to come back and try to repair this level. I think we're going to come back and try to re-auction it. Maybe I'm wrong. I don't know. We'll have to come back. We'll have to wait and see. All right. We do need to see more bullish price action, and we could be in the early stages of setting up an A to B equals C to D pattern. Now, if that is going to be the case with the ABC pattern, this low right here must hold. If we start breaking below it, we'd actually have to go back and redraw out that pattern. Out here on the daily profiles, we talked about this last night as well. Could this be a left shoulder, head, right shoulder over here, which could actually project that we're going to get up higher prices? We do have a gap from Sunday night along with the untested point of control, 5357.75, but we also have an untested point of control from yesterday at 5203.75. So we need to keep our eyes on a lot of these key levels out here. If you notice, we've been below value area high, but right now we're just slightly above yesterday's value area high. And this is why the overnight volume profile levels are going to be essential this morning, because one, they can give us early entries into the market, or two, they can provide additional targets moving forward. Now we come over and look at the economic calendar for today. We have zero economic news that we have to contend with today. So that's one positive out there. Now we look, ever since I started recording the first part of the video, you can see we're starting to roll over. The market is struggling to hold on to those higher prices. So now we got to ask ourselves, is this point of control going to come back and get tested? We come over and look at the overnight volume profile levels for the NASDAQ. You can see right now we are trading below the overnight value area low, which comes in at 18,133. The point of control comes in at 18,166.50. Value area high will come in at 18,347.00. So here's what I'm going to say. One, we're below the overnight value area low. Two, we're below yesterday's value area high. So if we stay below this price point, I want to look for lower prices like we talked about earlier. But if we start getting back above the overnight value area low, I then want to look to target the point of control. Then we can even look to target yesterday's value area high along with the overnight value area high, and then the additional targets to the upside that we spoke about earlier. So think about value area low from the overnight as being our line in the sand. Should we be long or should we be short this market? We come over, look at the S&P 500. We can also see we are currently trading below the overnight value area low, which comes in at 5249.25. The point of control will come in at 5224.25. Value area high will come in at 5288.25. So as long as we are below the overnight value area low, I want to look for lower prices unless we get all the way below yesterday's value area low and then we start coming back up. At that point, I would then want to be long. Or if we can start getting back above the overnight value area low, I also want to get long, looking to target the overnight point of control value area high. Anything above 5288, then I got to say, okay, where are we likely going? Well, I really want to focus over here for the gap to be filled along with that untested point of control that we have up here at 5357.75. Now, if you guys want to know, is Apex a scam? Is Apex still paying out its traders? Watch this video right here.